let's start with the weekly. As you can see, we've got a descending trend here, and we've got a little bit of a retracement upwards. It's coming to test this 9.5 zone. Usually any round figure is a psychological number for humans. We like round numbers. So that's why you'll start to see, say if it were to come all the way back up, it would come up to 1200000 and then bounce off. Or if it were to go down, it'll go down to 0.0060000000. That's just usually how humans work. That's how our brains are trained. We like round numbers. So you'll start to see, if you take into consideration where certain rejection levels are, if it's at a 6500000 or all the way up here, it's a 250. You'll see that quite often in the charts. So that's something to always keep aware of. That's not necessarily a main big deal for us, but that is something that does come into play when you're looking to trade these coins here. So I'm just going to quickly chart out my bias and how I'm looking at the charts. All right. So we've got a big old downtrend here. So if you've watched a couple of videos that I went over the patterns, you'll start to see what's happening. So we're going to put our downtrend. So we've got our touches. The most current two touches is what's important. So you can either go this way or you can go right to the top of the trend. I'm going to go to the top of the trend for now. I might change that in a second here as I go down, but we're going to do this for now. So I want to see what's going on here. So I've got one touch here, two touch here, 3, 4 touches on this downtrend line. So we know from back when I was talking about the patterns, we know that when we get a falling wedge, what do you need? You need 2 or more touches to validate it. We've got 4 for now, and that's perfect. All right. So same thing here with the bottom. We're going to chart this out real quick. I'm going to get one touch on that wick there, and then 1 touch on this wick right here. Cool. You guys see what's happening there with the trend lines? Are you guys keeping up with me? All right, so right now I'm looking at the weekly chart. So now what does that mean? That means that every single little candlestick here, correct, 4 on top, 2 on bottom, that is perfect. And what does a weekly chart indicate? A weekly chart indicates every single one of these little candles is 1 week's worth of price action, all right? So now what I'm going to take a look at is I'm going to actually drop it down to the daily. And now all this is just a zoomed in version of the weekly chart. The daily chart is showing me all of the moves, all the price action, and every single one of these candles is 1 day's worth of price action, all right? So you keeping up with me, everybody? So what we were just looking at before is this guy here, the weekly, right? So it's a little more condensed. There's less candles, not as much information. So now we got to go back down into the daily so we get a little more information. We understand exactly what the market's doing. Cool. So we're using multi-time frame analysis, where we're starting at a higher time frame so we can get that objective. We see, okay, all right, the market is in a falling wedge after an uptrend, right? So we've got this uptrend here. It moved up, and then we started to create a corrective move to the downside. The reason it's corrective is because of how long it's taken to get down here, and it's got a lot of consolidation happening. If you see, there's a lot of up and down movement in the market, constantly touching certain zones, rejecting, coming down, going up. There's no real trend. It's not really going any way. It's just going sideways. So that's what we call consolidation. All right. So let's get more information on this. So I'm dropping down, and whenever you drop down, you'll always notice your trend lines are a little bit off, just because on the higher time frames, it's kind of hard to nail it down right on the top of the wick. So I'm just going to go up here and adjust my trend line. So now if you see, I've actually taken it off the top there, because when you zoom in, you notice that it's not a touch. It actually broke that trend line. So I'm going to move this in to this guy here. And now we have, what do we have? 1, 2, 3 touches on the trend line. Okay. So we've got 3 touches. Now you can see we've got some consolidation here. So I'm going to draw my little line. We've got 2 touches there, And then we've got extend that one out. We've got 1, 2. You could say this is technically 2 because it just retraced, came back down. So we've got 1, 2, and then we've got our 3, right? So we've got 2 up top, 3 at the bottom. Now, for those who have gone through the continuation and reversal patterns, I'm sure you can see what this is starting to look like here. This is a falling wedge with a little bit of an ascending channel in there, right? So now, what are we looking for? We're looking for this little downtrend here. So we got that break out of the ascending channel. We got that 1 touch, 2 touch. So we got 1, 2, 3. So once we got that 3rd touch, we broke to the downside, right? We've got impulsive move, corrective move, and then we've got that impulsive move down, right? Now we're looking in this area here. So this is what was going on from April to May, was very corrective. Not much was happening in the market. It was just moving up and down in a range-bound ascending channel. And then in May, we got that break just after that 3rd touch. Like I always tell you guys, in the channels, you're always looking for that 3rd touch. When you see that 3rd touch, you're going to see a break, and you just need to determine which way it's going to break. All right. So now that we've got that understood, we're in a large falling wedge. We've got a little bit of correction happening inside this wedge. And then we've got this break to the downside and some more corrective nature here. All right. So let's get this charted out. We'll do 1, and then we'll do 2. So now what does that look like?